the bird that broke human predictions. Hey, my fellow rockheads. Today we're talking about one bird that explains how investors lose trillions of dollars. Not because it attacks people, not because it steals money, because it destroys certainty. For hundreds of years, Europeans believed all swans were white. Then explorers arrived in Australia and discovered a black swan. One bird. Hundreds of years of assumptions destroyed. An investor proudly announces, "I know exactly what happens next year." The future listens politely, then does something completely different. This is called the Black Swan, a rare event almost nobody expects. The housing crash, the financial crisis, COVID, sudden market booms, sudden market crashes. The biggest events in finance are often the ones nobody predicted. Today we're investigating why investors keep getting surprised, why forecasts fail, and why one unexpected event can change your portfolio, your house, and your financial future overnight. Grab your emergency banana. Let's begin. The most expensive bird in finance. All right, my fellow rockheads, the black swan sounds like a bird story. It's not. It's a money story. Because every major financial disaster starts the same way. People become confident, very confident. They look at the recent past and assume the future will behave the same way. House prices have been rising for years. A caveman buys a mammoth. The mammoth doubles in value, then doubles again. The caveman becomes a mammoth investment expert. The mammoth has other plans. Stocks have been rising for years. The economy looks strong. Everything appears normal. An investor looks at a chart. The line has gone up for 10 years. The investor nods confidently. Clearly, this will continue forever. The future immediately becomes interested. The strange thing is that this logic usually works. Most days are normal. Most months are normal. Most years are fairly predictable. That's exactly why black swans are so dangerous, because they arrive after people stop expecting surprises. Think about housing. Before 2008, many people believed house prices could only go up. Banks believed it. Investors believed it. Homeowners believed it. Then reality introduced a black swan. Suddenly prices fell. Mortgages became problems. Entire financial institutions collapsed. Trillions of dollars disappeared. Homeowner, my house is worth $500,000. Reality, about that. The important lesson isn't that housing is dangerous, or that investing is dangerous. The lesson is that the biggest financial risks are often the ones nobody is talking about. Humans spend enormous amounts of time preparing for ordinary problems, but financial history is shaped by extraordinary events, and those events usually arrive without an invitation. That's why understanding black swans might be one of the most important investing lessons you'll ever learn. Because the next financial surprise is already out there somewhere. The only question is whether you're prepared when it arrives. The investor's prediction problem. All right, my fellow rockheads. If black swans are so important, why do investors keep missing them? Because predicting the future feels profitable. Everybody wants to know which stock will win, where will house prices go, will interest rates rise, will the market crash? Caveman. Will mammoth prices rise? Expert. Absolutely. Caveman. How do you know? Expert. I own 3 mammoths. Humans love certainty. Unfortunately, the future rarely cooperates. A financial expert appears on television. He confidently predicts what the market will do next year. The interviewer is impressed. The future is not. The funny thing is that most financial forecasts are based on things that already happened. Analysts study trends. Investors study charts. Economists study data. Nothing wrong with that. The problem is that black swans don't appear in historical averages. That's why they're dangerous. Nobody predicted COVID would shut down economies around the world. Nobody predicted that interest rates would stay near zero for years and then rise so quickly. Nobody predicted exactly how artificial intelligence would suddenly become one of the hottest investment themes on the planet. Investor, I have prepared for every scenario. Reality. Excellent. Here is a completely different scenario. The biggest financial winners and losers are often created by events nobody included in their forecast. A market crash? A banking crisis? A technology breakthrough? A housing boom? A housing collapse? The lesson isn't that research is useless. The lesson is that confidence should have limits. Because the moment investors become absolutely certain about the future, they stop preparing for surprises. And financial history suggests that surprises are usually much more powerful than predictions. That's why the smartest investors don't just ask, "What do I expect to happen?" They also ask, "What if I'm completely wrong?" Next, the housing black swan. All right, my fellow rockheads, let's talk about one of the biggest financial decisions humans ever make: a house. For most people, a house isn't just a place to live, it's their largest investment, which makes housing a perfect place for black swans to appear. Because when people buy homes, they often assume the future will look similar to the present. Interest rates today, house prices today, monthly payments today. Everything seems manageable. Then reality decides to become creative. A homeowner buys a house. Interest rates are low. Monthly payments look comfortable. 2 years later, rates rise dramatically. The homeowner begins learning new financial vocabulary. A caveman buys a cave. Interest rates rise. Soon, the cave owns the caveman. The funny thing is that housing markets often feel safe. People can see the house, touch the house, live inside the house. That makes it feel predictable. But housing markets are connected to things most people don't control. Interest rates, employment, credit conditions, population changes, government policies, economic growth. A single unexpected event can change the entire market. Just ask people who bought homes before the 2008 financial crisis, or people who bought homes during ultra-low interest rate periods and later faced much higher borrowing costs. Homeowner: my mortgage payment is stable. Interest rates: for now. The lesson isn't that buying a house is bad. The lesson is that certainty is dangerous, because the biggest housing risks often aren't the risks people discuss every day. They're the risks almost nobody expects. That's the black swan, the event sitting quietly outside the forecast. The surprise that suddenly changes what people thought was impossible. And housing isn't the only place where unexpected events create winners and losers. Sometimes a black swan doesn't destroy wealth. Sometimes it creates it. Why investors miss the next big thing? All right, my fellow rockheads, here's something strange. Most investors are terrified of negative black swans, market crashes, housing collapses, recessions. But they often miss positive black swans too, and those can be just as powerful. An investor discovers a strange new technology. He laughs. Nobody will use this. 10 years later, he is explaining this story at family gatherings. The funny thing is that the biggest investment opportunities usually look ridiculous at first. The internet looked risky. Online shopping looked risky. Smartphones looked risky. Cloud computing looked risky. Artificial intelligence looked risky. Before they became obvious, they looked uncertain. And uncertainty makes humans uncomfortable. That's why most investors don't miss opportunities, because they're stupid. They miss them because the opportunity doesn't fit the current picture of the world. Humans naturally ask, has this worked before? Black swans are dangerous because the answer is often not really. Investor: show me 10 years of historical data. Future: unfortunately, I haven't happened yet. The same mindset that protects people from bad investments can sometimes cause them to miss extraordinary opportunities. That's why investing is difficult. You must be cautious enough to survive negative surprises, but flexible enough to recognize positive ones. The goal isn't buying every exciting new idea. The goal is avoiding a mindset where new ideas are automatically dismissed, because some of history's biggest fortunes began as ideas that sounded ridiculous. And almost every black swan opportunity looks obvious after it succeeds. Next, the smart investor's black swan rule. All right, my fellow rockheads, after all this talk about black swans, you might be wondering, how do I prepare for something I can't predict? Excellent question, because if black swans are unexpected by definition, trying to predict them is a little like trying to guess where lightning will strike next year. Possible, but not a great financial strategy. The smartest investors don't spend their lives predicting every surprise. They focus on surviving surprises. A caveman asks, "Can I predict the next market crash?" A wise caveman shrugs, "Probably not." The caveman thinks for a moment. "Can I avoid being destroyed by it?" The wise caveman smiles. Now you're asking useful questions. That's the difference. A fragile financial life depends on everything going according to plan. A resilient financial life can survive when the plan falls apart. Emergency savings, reasonable debt, diversification, cash reserves, multiple sources of income. Investor A puts 95% of his money into one hot stock. Investor B spreads investments across different assets. A black swan arrives. One investor needs aspirin, the other needs therapy. These things sound boring, very boring, but boring is often what survives black swans. Investor A, maximum risk, maximum return. Investor B, I'd like to survive. 10 years later, Investor B is still around. The strange thing is that people spend enormous amounts of energy chasing higher returns. But financial disasters are often caused by something much simpler: running out of options. That's why the real lesson of the black swan isn't prediction. It's resilience. Because nobody knows what the next black swan will be. A market crash, a housing shock, a technological revolution, a new opportunity. But whatever arrives, the investors with flexibility usually sleep better than the investors with certainty. And in finance, flexibility is often worth more than confidence. The most dangerous words in finance. All right, my fellow rockheads, after studying black swans, I think I've discovered the 4 most dangerous words in finance. This time is different. Every major financial bubble eventually produces those words. House prices can only go up. This time is different. Technology stocks can only rise. This time is different. Interest rates will stay low forever. This time is different. An investor points at a rapidly rising chart. Nothing can go wrong. The chart hears this and immediately becomes interested. The funny thing is that the people saying this time is different are usually intelligent. They're not crazy. They're not stupid. They're simply looking at recent history and assuming it will continue. And most of the time, that's exactly what happens. Until it doesn't. That's when the black swan arrives. The event nobody expected. The event nobody included in the spreadsheet. The event nobody prepared for. Investor. My plan covers everything. Reality. Challenge accepted. The biggest financial mistakes are rarely caused by lack of intelligence. They're often caused by overconfidence, the belief that we understand the future better than we actually do. That's why smart investors remain humble. Not because they know less. Because they know how much they don't know. The market can surprise you. Housing can surprise you. Technology can surprise you. The economy can surprise you. And that's exactly what financial history has been teaching for hundreds of years. The black swan isn't an exception. It's part of the game. The only question is whether you'll be shocked when it arrives. All right, my fellow rockheads. After investigating the black swan, I think I've reached a financial conclusion. The biggest risks in investing are rarely the risks everybody talks about. They're the risks nobody sees. The housing shock, the market crash, the unexpected recession, the technology nobody predicted, the opportunity nobody imagined. An investor proudly announces, "I have planned for everything." Reality reviews the plan, then submits an alternative proposal. The lesson of the black swan isn't that forecasting is useless. It's that certainty is dangerous. Because the future has a habit of surprising even the smartest people in the room. That's why the Finance Caveman rule is simple. Don't build your financial life on the assumption that nothing unusual will happen. Keep some cash. Avoid excessive debt. Stay flexible. Leave room for surprises. Because somewhere out there, the next black swan is already flying toward the market. Nobody knows when it arrives. Nobody knows what it looks like, but history suggests it's coming. I'm Finance Caveman, and I'm still trying to figure out why humans keep acting surprised when the future refuses to follow the forecast. See you next time. Peace.